to get to 1203. That's slightly above that 1202 bar, okay, which is this one right here in the platform. And that's 2 deltas up. That's $14.46 above the market to get there. If we get back up above that 1210 that I'm talking about, from home plate here to price to delta, and they change every day, that's going to be 21.69 handles higher to get back to this 1210 area, which is 1211. So we know exactly in our platform what will happen. We also know that the mathematical ratios will tell us how strong that move is going to be. And what I am going to say is, if we break below that 1175 on a closing basis, stop market orders and the broader general market are going to get triggered. It also requires you to understand that every one of these 1218, there's 1175 put, there's 1175 call, and we will be doing the mathematical imbalance ratio in the index call and put options on the S&P 500. And basically, if you take a look here up above the market for expiration, if I pop in this little chart right here, I can see where these contracts are. It's a 1225 put that has made a bottom finally. They were up here at $120 a contract. We made a bottom down here. And basically, we're going to be watching that the put side doesn't go higher on the 12. That's in the money put. But watch this. We're going to go to this very same call contract, which is the back half of that trade. That's the upside. Now, this particular contract is getting very wholesale on the S&P 500. So basically, when we're looking at that options volatility and we're looking that they have taken it from the inflated price right here. Retail public got publicked. $29 a contract was the inflated on this is 1225 call contract. That was a good buy down here on 829 because we were going long then. We said that the pullback was over in August. How far it would go in September and October, no one knew, but they created a 71 phenomenal event, 71 years it took to get a good move because we never get a September and October that way. And part of what you see happening in the S&P in general over here is part of what should have been happening in September and October. One of the things about this S&P 500 MMTs, market makers are going to square their books on the floor. Okay, true story. So that's going to be an overhead challenge maybe for the market. But however, they're going to clear their tape. Market makers are in the option pit and market makers who trade the S&P 500. Guys like we know, guys like me. And basically what I am going to tell you is that on this S&P 500 chart is that we got buyers that are coming in. Here's the big breakout. So you had 1, 2, 3, 4, 5, 6, 7, 8 weeks to the top and 3 weeks right back here. And we're trying to hold what that key psychological level at the time was 1175 on the S&P. But you were there, you know it. And the thing about it is, that's going to be the major catalyst of that support level. If we break it, the next milestone was 1150 on the S&P. Right back over somewhere in here. Here, let's try to populate the bar and find out. That close was 1125, was 1113. So it's got to probably be somewhere in here. There was 1144. 1146 was a close back then. But here's that high of that 1157. That was a major resistance area within the S&P breakout trend where it had to clear. In fact, it took about 9 passes at 1150 before it got above it. Once it cleared it, We cleared that 1175, and we have all those live videos and analysis right there on that homepage. Let us not be in denial, but rather let's be proactive and go back and look at the finding, facts, conclusions, and the reality. That's why these are videotaped for SMF MMTs. They're able to go back and look at the other cycle of what I'm talking about here and now. So if you break 1175, well, that next handle is going to be right about probably 1151 on that S&P, about $1 above that 1150. So in the near term, if we're going to have a rally come next week, what's going to happen right here is that you can see where the buyers came in distinctively and clearly. That's called professional money up. So it went 1 teeny, 2 teenies, 3 teenies, 4 teenies up at $7.23. We'll do 4 times 7 is 28. Then you add in the pennies. That was where the bottom up. That's called accumulation. They did not break that teeny line. He came back here again and did it. However, like I said, what we're going to work with, this is a big move that week on 11/15. We're going to take that move right here at 12:02, and we're going to look that we close above this teeny line up here where that big wick down was. So far, the S&P had a total movement, MMTs, of $34.43 this last week. The prior week was even greater. No, it was not. It was 32.76. But in trend cycles, these SMF half weekly, 3-minute, whatever time frame is, that this half weekly, when you are minus 3.16, that's a negative ratio in the trend. So we got to overcome that on a closing price. And 12:02, the S&P has to close above it. If we break below that 1175, then we're going to have to go back and revisit these areas of the market. Here's 1160 on the S&P. Here's that major breakout. When we could finally clear this on a weekly level, we came down, this was a big move that week on the S&P. The low was 1132 and the high was 1157 in that price action, and we finally got above it. Then we had a 1, 2, 3 week breakout to that final high. So we've had 3 weeks of selling. Okay, the blue line is a standard 10-week moving average. And MMTs are taught about mathematical equations is that we're minus 13.87. That's not good, MMTs. However, the buyers are stepping in. If I come up to 1202 and I hit resistance, then I start buying the $1,200 put. If I cannot close above it, then a put option comes into play, MMTs. It's going to be that simple. However, there's always a counter trend to a reversal trend. And so far, we have a double week price action delta line that is holding to the penny, but we're lagging. We're going to have to see closes above half of this bar, 1190. The S&P closed at 1189. I'm sorry, 1189.4. We're not closed above half of the SMF weekly price action bar. So in the near term, we're definitely going to have to close above this last week. And we're going to have to move up and take these upper delta lines out in the system at this topping pattern. That's this topping pattern, MMT. And this down here does not lie. It will be accurate, as it always is. That's the S&P. That's the upper end. Stop market orders get nasty. What the close below 1175 would take it down. And it would take it down another 1 delta, 2 delta, 3 deltas. There's 3 deltas below the current delta, 1 delta formula of 7.23. Naturally, it changes every day, but it will be accurate. And that means that either a $1,200 put comes into play, or MMTs, let me show you something even more wonderful. The call option that I'm talking about is a 1225 call. there's a move up here to $10 very easily. If we don't break down here, then I want to be buying up and out of the money for the December expiration, because the call contract was inflated at $29. I'm a wholesale market maker, pal. The public rides them down and gets wiped out, but the market maker that you are and your platform allows you to buy the other side of the public. So when the public was engaging up here, you were selling short. And when the public doesn't know how to engage down here and they're being shook out, you're taking the opposite side. But you have this system here that tells you why in the directional movement in that info panel. That's the analysis on the upcoming week of the S&P 500 index.